Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. And welcome back. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles chassis in the intraday developing time frame. And I think today we might want to name or label today's stream Tariff Roulette, because that's kind of what's going on today and recently. So we're going to talk about it, and we're also going to talk about how the market responds to new fundamental inputs, how that changes the condition of the market, and also how you can adjust your trade or your plan to the conditions. And in the TraderLab, the purpose is to help traders understand market mechanics. How does the market work? Why does it do what it does? How at times you get in alignment with it with structured, vetted trade plans and using structured trades. The idea of TraderLab is to help traders learn and understand the business of trading, and then to adapt whatever processes can create a vetted statistical edge into a plan, so that over time they have the opportunity to extract dollars from the other participants. And of course, it's a two-way street, if you will. We also do pay the other side, the other participants, same as how the casinos operate. So that's really the basis of the business. Then it's a matter of just waiting for the trades, and similar to the way the casinos work, only play the games that have an edge that favors the casinos. And remember, casinos do pay the gamblers, but in spite of paying the gamblers, they also can give you the cocktails and the ticket to the buffet, and maybe tickets to Adele. Let that be something to consider. So let's get going. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Grab a pen and paper. There might be a couple of things you might want to take a note on, and also be sure to watch this stream again. Subscribe to the channel. There's a lot of good information, not only just in TraderLab for developing traders, and it doesn't matter how long you've been trading. Our senior trader has over 50 years, and it's open to everyone. Doesn't matter how you approach the market, and it's really about participating and growing your business. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Nobody can hand you a solution, but you really need to do the work and create a template or a process that you can then use as a business model. Consider that. This is not a video game. This is really a business of statistical edge. So if you don't have one, and this is not an indicator-driven business, this is a statistically based business. So you might want to give that some thought. And by the way, we all have winning trades. You know, that's not the issue. The issue is maybe only interacting when the trades you do take have a statistical edge. The fact that we have winning trades is actually part of the problem, because gamblers win also in the casinos, and they get paid. But over time, the casinos extract the dollars from the gamblers. If you haven't thought of it that way, I'm going to suggest that maybe you take a pause, a deep breath, and consider the business you might be in. Just a thought. Now, this is Friday's RTH session. Now, what was interesting is on Friday, now this was a gap, so I left this open. So what we had was up, 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 and I've been over this in the previous streams, up here, and then we had the news actually came in on the gap here. So this day, this was resistance, and this was resistance for this day. So basically, uptrend, if you haven't noticed, and sell stops under here, under here, under here, under here, under here. And then we get the supposedly the 90-day pause in the tariffs, which created this gap, is now maybe not so much. And that's why I'm calling this tariff roulette. Now the market sells off, tariffs are back on. And then we come back, and this was the full gap. And it looked on Friday, we were falling out of this and headed here. So that's fine, because that was the condition of the market. Then over the Memorial Day weekend here in the U.S., tariff roulette. Now we're going to hold off on the tariffs. So it was reported that Apple would have a tariff and the EU would have a 50% tariff. When it was reported previously, it wouldn't. Like, again, as I say, tariff roulette. So what does that do? Now let's talk about how the market works briefly. The auction, the job of the market is to figure out what's too high, what's too low in all fractals and time frames. Fine. When you throw a new input into the market, no matter what it is, could be an economic report or a POTUS tweet, doesn't matter, a change in what's perceived to be valuation, because then pricing must adjust. Same thing is like if orange juice, there's a freeze in Florida, changes the perception of valuation, either because of supply and demand, and in this case, tariffs or cost. Okay, so change. So here, jump out the window, and here, change your mind. Now let's continue. Now I want to go a little further. This is the gap that's left from Friday. This is the retail price that was accepted on Friday. And on Friday, I was trading primarily, I was trading, trying to remember here what I was, shorts. So it was mean reversion for me, and we had the potential for a gap fill. And then we sold off. The condition on Friday was suggesting, and remember, if you watch Friday's stream, it was all about responsive buying. Who's responding? Those who want to get out of Dodge over a long weekend. If you're sitting short, the responders. So what I was doing was fading, and it doesn't matter what I do. I just follow, whatever. I was just taking shorts. And they were quite nice. But once we came above the first hour's high, I'm off the shorts, and we had what's called the IB continuation trade, which is a long, and then fill the gap or however you manage your trade. And then here's the key piece. And then the selling at the end of the day came back in. Okay, that's why it was responsive and not initiative. And there's a big difference in how you handle that, subject to your plan and time frame. So anyway, and then for me, I was looking for it to continue down into the gap and come back into this composite or consolidation. So that was my plan. I just want to show you something close up. Now, here's the other piece that's important. This day here, which has a selling tail, this is called the microcomposite volume point of control. It's the highest volume, taking in all from the swing high to Friday's swing low. So this is the price, that's the fair price. The auction is a shopping experience. So it's what's too high, what's too low, what's retail. Now, it appeared at the time we were breaking away from this, and then we were going to potentially come down to there, and whatever. So far, so good. And then we have tariff roulette gap. Now, notice where we are. And I took this, maybe 15 minutes or so ago, 59.08. So we're pretty close to that. Currently, we're trading there now. So here's what we did. We gapped higher. We got what's called responsive selling, and we'll look at that. That is shorts covering our buyers, and then sellers thinking that we want to sell it or somebody wants to sell it. And then we came back into what's called value. And so we have gap, selling, and then either we find our buyers or it's hasta la vista, we'll see you later. Well, since we're being driven by fundamentals, and here's the important piece, and I'm spending time with this because if you need to have a plan and understand what changes. Now, why did the market sell off here? Well, change. The 90-day hold was disrupted by the announcement by POTUS of a 50% tariff on Apple. Well, everybody jumps out the window. Now it's on pause. Everybody jumps in the pool. It's whipsaw city. And that's the nature of the environment we're currently in. So what that does is when the fundamental inputs change, the market has to take that new input and reprice. So when we had the pause, the cancellation of the pause and the Apple news and the EU news, reprice. Change in that, reprice. Very important to understand how the market works. It is a pricing mechanism. When things change, you got to change. And that means trade plan and defining conditional behavior. So that's what we do in TraderLab. It's about trade plans, not predicting what the market's going to do because nobody has that. So then it's how do we identify change and then where might we get aligned with the market? So let's go take a look. Now, if you have questions, please post them. I'll do my best. How we doing in YouTube? How about giving a like, by the way? It's always nice to be liked and support the channel. Also subscribe to it. Appreciate you guys visiting TraderLab. Remember, the lab's available to all of you. There's a link in the bottom of YouTube. It's not a trade calling room. It's really to help you become an independent trader. The thing about trading is it's not, I think traders go to chat rooms or whomever the guru du jour is and try to replicate. I have found that kind of stuff just doesn't work. But what you can do is take concepts and then develop them into the rhythm or the rotations that give you a statistical edge. So it's how do you feel about it psychologically, a feeling being emotions? How do you align with it? So let's take a look. Buy sweep on the open. Now remember, let me show you a couple other pieces here. The 07, 08, that's a target coming up. The ETH high is a target coming up. 59.13-ish is called a single. Last time we were up here, we ran away, if you remember, to the downside, and this is a poorly auctioned area. It becomes a target on the way up. And here's the other piece that was interesting, and this is posted in the TraderLab chat. The ETH high was here, and part of that has to do with checking this level, which is the high volume, which I showed you at the start of the stream, and if you're a little late to the stream, just go back to the beginning. And this is resistance. Now let's come back in the other direction. The ETH low is above this level. It's bracketed. Now 58, 57, and the 13. Let's come back and look at these. And you're probably thinking, why am I showing you this? Because let me see if they're on here. Okay, wait a minute. 58, 58, or 57, 58, 57, and then 59.08. The single will not show up on here. The single is coming from this day. This is where we jumped out the window, if you remember. So let's go back. 57. So in the ETH, we came down. And we don't know. Now, remember, there's no precision in the auction. This was a retail price. Everybody agreed on this day that this was the fair price. And then we left it. Well, if we gap above it and in the ETH, and of course, and it's too low, we're not going to get there. And we leave it. Now, let's go the other way. The ETH high, the single. So we have it defined as far as our ETH. Now here's another piece. The ETH volume point of control. So in the ETH, this is the retail price. So too high, too low, retail. Okay. And I believe this is the high. I can keep my days straight here for a gap fill. So let us move forward, as they say. This is the RTH open. It's here. Now, remember, there's a couple of things. We are gapping out of range. Now here, and this is a grid sheet I created. It is to help traders understand the condition of the market and what you might anticipate. It is the first piece, other than understanding how the market works, of course, and then when we open, what is the opening condition? Now we know it's a gap. So let's look at our opening conditions, and then we're going to talk about primary statistics. All of this is part of a plan. Now, this might be too much detail for you, and I can skip over this. I understand, you understand. I kind of think when I sat on a trading desk and was coaching other traders, this is what had to happen. And all this is done before the open. So we opened out a range and a gap. What does it mean? The market is out of balance. Balance is where the market accepts pricing, and that was Friday. And now we have gapped higher, and that means something has changed. And of course, tariff roulette. So is the market responsive? What is responsive? There's two types of trade, basically. Responsive selling are those who see the higher open, and either they're going to fade it, they're responding, or somebody is long, if that's the case, and they're taking a profit. Pick one, you know? So is the market responsive? Well, we started out, yes, it was. So what can we do with that? Well, on the grid, which is a contextual grid, here's the choices. You can fade the gap back into balance. Yeah, but balance is all the way down in Friday's range. Not likely, and this is not just another walk in the park. This is a change in a fundamental input. So the auction as of Friday, basically, we have to go back and we have to go, what disrupted the auction, which we know was a tweet, and then now we've kind of put that on hold. So if the market responded to a change in the fundamental input and did the Acapulco cliff dive, and now that fundamental input has been put on hold until the next roulette spin, then we have to consider the market will go back to where the auction was disrupted last time. Is that making some sense? Are you guys tracking? So, knowing that, now there's more. We are going to be looking at what happens with responsive selling. Now, the problem or the challenge, and I don't know if it's a problem, I think, randomness is a, quote, problem for us because we have no control over what these participants are going to do. We do know the condition and we do know why. That's as deep as this gets. So now what are we anticipating? Well, when the market gaps like this, there's a couple things that can happen. Obviously, it could just gap and go. That's one possibility. So for me, when the market opens like this, I get very patient because I know there can be a lot of volatility, and I just get patient. Because I have no sense, I don't want to say a sense of FOMO. We all feel FOMO, but I've learned through tracking my response to FOMO that that's not a profitable process for me. So I just wait. So the options on this condition are fade the gap into balance. Now, I'm coming back to higher time frame. I know it's going to blow your mind, but with the gap, where was the RTH open, guys? I'm kind of lost it. 86 quarter, okay? So it was up in here. This box in this day is called the value area. This is where 70% of the volume took place in this day. So this was too high. You see the extreme. And then the market spent most of its time here. The yellow line was the fair price, where most of the volume took place for the day. When you gap out, then it's, what does it say in our sheet? Is the market responsive? Yes. What do we do? Well, you can fade the gap back into balance. Then you have to watch for a bounce and a retest of this range and the previous value area high. That's the previous value area high here. And the range is here. So that's the first thing we're looking for. Now, in your plan, you have to determine, do you want to be a seller or do you want to be a buyer? Good question. Well, let's look. Buy sweep suggests counter rotation. Let's watch. Now, statistically, and now I'm going to go to another reference that we have in TraderLab, statistical probabilities. We opened higher out of range. Here's a couple of things for you to ponder. Getting to the overnight volume point of control. Hold on. I'm showing you the levels. I want you to see where all this stuff comes from. Hope I didn't lose it. Where is it? Whoop, got to be down here. Hold on. I got to find these levels. 97, right? Is this covered up? Must be here. I believe 97-ish. This is the overnight volume point of control. TraderLab confirmed that for me. The overnight volume point of control, which is the highest volume, has about a 79%-ish probability of getting taken. And by the way, you got to vet all of these for yourself. The ETH high has a 76%-ish probability of getting taken out. The first hour's high has a 68% probability of getting taken out. The ETH mid, a 62% probability of getting taken out. And I don't think I've got much else going on over here. Okay, so that's the statistics, and you have to vet those for yourself. Okay, so this says counter rotation. Now, right here, this is called the variable high volume node. This is a process I created many years ago for myself. And at the time, nobody that I was aware of was using it or doing it. So I've been doing this a long time. So I made a terms for them. They didn't create, weren't out there in the literature, and I don't know what's out there now in the literature. So what this says, if this is the highest volume price right here. So if this is the retail price and I break away from it, then it is going to suggest the following. Maybe it's too high. It's my first suggestion that I might have found a price that's too high. And I think of this as resistance. Now, too high doesn't mean sell it. It means rotation. Also, when we opened up, where did we go? The ETH mid. So hit the mid, come back to VWAP and mid, and then I'm looking here to see if I rotate down. I go up, so I'm going, well, okay. Now there's a couple possibilities right here. This, now I didn't take any of these. I'm just saying, because I'm looking for what? Responsive selling. So I'm patient, and I post this in TraderLab. And it doesn't mean that this might be the long of the century. Absolutely not. But I did, it's not my trade. I don't do it because I want location, and I'm looking for what in my trade plan? Responsive selling. Now I don't know if that's it, because this certainly could be a little wiggle and then off to the races. And if that happens in my plan, my next thing would be to look for a rotation down and continuation trades in something called mean reversion. So let's watch again. Too high, too low. I got to label this, by the way. Now, if you took along here, which is viable, if that's your trade plan, it's not mine. And I'm not saying I have a good trade plan. I'm just saying, as I've learned over the years, to manage FOMO and to be patient. And if the market doesn't come to where I want to participate, then I wait for the next bus. It's not more complicated than that. Developing traders, though, are all jacked up with adrenaline and FOMO. And I will suggest that patience pays more than FOMO. And you just have to start differentiating your emotional triggers. And you need to be a little more strategic, in my opinion. But that's up to you. You know, our traders are going to trade this in TraderLab. If you're getting here, the way I was looking at this, I just want you guys to know. I didn't take this because I looked at this and I said, well, I've got my first target and my entry would not be until in here. Where am I going? I don't have range. So that kept me off this trade. I'm just giving you reasons for the trade because if I don't see a way to get risk neutral, I am not interested. Here. So too low, new retail price, too high. This can become support. Right here, it is support. This is your new retail price. What do we need here? For the market to continue higher. What does it do? Breaks low. So what do I know? I have resistance here. That's what I know. I don't know anything else. That's what I know. What I'm doing is I'm bracketing this high volume right here. In other words, this is an auction, this little too low, too high. And what is happening here? Sellers are here, buyers are here. Now, what we don't know, and this is delta. Now, notice what we see here. Selling icebergs, buy stops. Selling icebergs. I'm going to show you a little something else here that's kind of neat. This is a stop and iceberg detector. Okay, very cool. And 26 stops, buy stops, and that shows up as delta, you know, market orders. Selling iceberg, going to the moon. 2 buy stops, selling iceberg. 1 buy stop, selling iceberg. 1 buy stop. Now, that we're aware of, okay? And what is happening here? Isn't this divergence? Higher prices, buy stops, market orders, selling icebergs. And if I don't continue higher, what might that suggest? Might underline that we're running out of our buyers. All right. Where were our buyers down here? Well, here. So there. Notice what's going on. Consolidation. What is a consolidation in all fractals and timeframes? It's an auction. I'm not paying that. Yeah, but it's on sale. The volume is here, and you could see this in the profile. This is why I use the profile, because all prices are not considered equal, right? High volume is like shopping in your store. Retail. In this auction right here, the buyers and sellers interacted, and the volume is here. This is like the retail price. Sorry. When we break down, that is saying, so these buyers here are now under the bus. It says too high, the retail price, too high. And if we break, it suggests if I can't get back over here, then hasta la vista counter rotation. One piece. Now, what this is a fractal of this. This yellow line is showing us the highest volume overall for the current developing RT8 session. So this yellow line moves around as the volume is moving around. When I get up to a fractal, which is just isolating this auction, versus the whole RTH, I'm using the same concept right here. So this is like a volume point of control in this auction, too high. In the developing daily auction, too low. Too low. New retail price. So support, resistance. Let's look. What do we check? I'm not paying that. Get out of here. Is this making some sense? I'm going to move faster, but I always like to go over these concepts for you because now you kind of get it, maybe. And if you don't, it's okay. It took me, well, I've been doing this for 46 years now. And I have to tell you, before I came up with this kind of concept and approach, and after I learned market profile in the mid 80s, it probably took me another 8, trying to think, 85, 90, maybe another 8 or 10 years to sort this out. I had elements of it, but it still was kind of mind blowing. So too high. So here's the thing. This is the same as that. This is a fractal. And what is a fractal? Very easy. You guys think of it as multiple time frames. I use multiple time frames, except in here, because there's no clock. In here, it's fractals. And they are interchangeable, except this is not regulated by the clock. It's regulated by the shoppers or the participants. So when this happens here, I know that we might have found too high. If this is my little VPOC in here and I check the retail price in this store, think of them like stores, then hasta la vista, thanks for playing, and you get a coupon to the buffet. Now, if you can think of shopping, you already know trading. The thing about our shopping experience is it's going to happen all over the place. And we have to be conscious of locations. Now, I don't know where the high or the low, we don't know that. And if you do, come to TraderLab, clue us in. But in the meantime, we try to stay in alignment by reading the behavior. This is a language. Now, those of you who use indicators, you're basically using some kind of price derivative extraction to follow the market. I'm following the market here. What is more timely to tell me either to get out if I was long from here, or take a short for a responder, or wait for a long? It's up to you. Let's see what it does. Pullback, and what's this? Too high. VPOC migration. Now, remember, your trade plan, and by the way, I have to say, I was talking about vertical integration of time frames as you think of them. Another way to think of this is Matryoshka dolls, because the process of the market happens in all time frames and then fractals. It is a what's too high, what's too low, what's retail, and you could see it right there. And if that's too high, I leave it. So I'm in microstructures here. You could just see it. Chop, chop, chop. I'm not paying that. Buyers were here. Break low. Where's my volume? It's in here and this. Support. Break below. Resistance. A little advanced concept. Potential short. And again, I'm not taking any of these. Not my trades. I'm just going, oh, come on. So let's watch VPOC migration. The language of the market. What I learned, and it took me forever, and I mean literally, was to speak a foreign language. If I can speak the language of the market, I don't need Google Translate, and I don't need any indicators. Now, I'm measuring the volume, but I have nothing that tells me get long, get short. I'm not using moving averages. I'm not using any of that stuff. I'm not drawing trend lines. I'm not imposing structure on the market. I'm letting the market tell me. It's a different way to look at it. And again, it's not about what's right or wrong. It's about edge and consistent application of a process in a random environment. So right here, here's the possibilities. Let's look at possibilities. This is now the new retail price. And it shifts right here. It is saying there's more volume here. It's also saying everything above us is too high. That's what it is saying. New retail price. Notice what's going on. Test too high. Test looking for this, right? Going to zero, Lewis. What happens over here? Let's see if we can detect something. So I'm looking to get long, and I'm inside of, got to bring it back. This is what makes this worthwhile. I'm in here, and this is where I am now, over here. So I'm in this. This is called the value area of this day. This is where 70% of the volume was. Coming in here is responsive selling. So whatever, and I go, I don't know, truly don't. Do you know? I don't know. You know, help me, because I'd like to know. But I figured out I don't know, so I'm clueless. Clueless doesn't mean ignorant. So what I have is a inquisitive open mind. Because this could just do this, come out here, and then drop. So I don't know. Right here, this is my first suggestion of potential change. And again, I don't know. No clue. So don't think I know anything. What I know, here's what I know. This is too high. My mid is here. My VWAP is here. And if I come out here and I get here and I can't clear this, then I know I can come back here and continue lower. This is what I know. But let's see what else happens. VPOC migration. What is this saying? What happened here? VPOC migration, lower. What happened here? VPOC migration, higher. What happens here? VPOC migration. Is it going to go lower? Higher. What do I want to do? Get long. You see the change? Now, you have to have a plan for this. And if it's not your trade, there's nothing to do. You sit and you work on your crochet. This is not a business of FOMO and chasing. This is where things were changing. And this is a potential long in the TraderLab. If not, when we pull back here, this is where the trade would fail, and you could be getting long in here if it's a vetted trade and it fits your risk parameters. Remember, too high, too low. Now, I can't activate here. Others probably can. Me, not so much, because I still need to know because right now, this is my resistance, and I got the mid and the VWAP. So right here, it can either come here and down here, or when this shifts up, push off. Remember, push off. So opposite behavior, okay? Push off. So longs. Pullback. This is a potential long. Remember, pullback, potential short. Pullback, potential long. Pullback. Absorption, potential long. VPOC migration. Going to the moon, Alice. Where's resistance? It's right there. Observe. Resistance, I'm going to throw a little line in here just so you can see this, and I'll take it off, is here. Why? Too high. What else do I know? Opening swing high is up here someplace. Here, right? I think. Yeah, I don't remember where it is. I'm kind of forgetting. 8:30. Yeah, I think it's this. So there's going to be stops up here. So this is my resistance. It's also the full session VWAP. On these longs, the way to think about this is we checked. Now let's go back to our context sheet. What did we do? We went into that value area, We checked it. And is the prior range holding? Yes, we came back out. The fade is no longer valid. The trade back in the direction of the imbalance, and we have to monitor for continuation. What is going on? The market has accepted the imbalance. Why? The market broke out of balance from below and subsequently rejected prior interpretation of value. This confirms sentiment has changed, and position traders still feel value is higher. So the higher time frame participants north of the border. So we want to align. This is, for me, right here. This was a, what's going on? This is, okay, too low. It's the same reason this was too high. So you can see the reactions, okay? This one, not so much. This one, very much. And this one, and this. Okay? So it's longs only. VPOC migration. What does it say? Going north, Lewis. Okay, now this is a big deal. This is called the microcomposite volume point of control. And what this is the highest volume for this swing. In other words, Friday's low to this high. This was where we fell out and got into the gap. And then, of course, we have news, tested this value area, and this is the retail price in this whole thing. However, let's come back to what disrupted the auction. It was news. Well, if the news takes us down, and now we've kind of put the tariff roulette on hold, where might we come? We can come back, and it's not a recommendation, and come back to where the auction was disrupted. Oh, we canceled that out? Okay, let's come back here. Not a recommendation. I'm just saying that's kind of the way the market works. Doesn't mean it will. So this was a key location, and this is called, and this will get a little confusing, because remember, Russian dolls, Matryoshka dolls, they're inside each other. You have the short time frame, the developing time frame, the developing daily time frame, and then the higher time frame or intermediate time frame. It all works the same way. These little rotations are the same process. This is the retail price. If I can get over it, I can keep going. So in the TraderLab, this would be a target because it is called mean reversion in a intermediate time frame. This is the fair price for all the volume. And when you have mean reversion, the structure is called outside in, and then go to the other side and maybe go back to where the auction was disrupted, which is possible, or eventually come back here, or whatever it does, it does. Not our job to, figure that out. Oh, and what was that probability? The ETH high? I know you wrote this down. Let me get back to our statistics. About a 76%-ish probability. You have to vet those for yourself. And remember, there was a single up here from the Acapulco cliff dive day, which was resistance in the ETH. But let's come back to context. We checked the value area below with the responsive selling. It's too low. We have now come out, and now we're in the express train looking to reclaim what was disrupted by Tariff Roulette. So this is the next target. So if you were long, subject to how you manage your trade, if you're using statistics and a vetted trade plan, you'd be going for this and higher. This is the next target. And in trade management, under this condition, it's really an outsized opportunity. And these are the days that if you have a plan for it, you can do quite nicely. If you don't have a plan for it, you're going to be responding to FOMO. And I got to get in. I got to get in if you didn't get in. by the way, in TraderLab, at least a way to work this is this is a trend configuration, okay? It's going back potentially to where we fell, right? Market goes up to go down, market goes down to go up. Fundamental inputs cause the market to re-auction or reprice, you know? So how do we trade this now? Well, not a recommendation, but the way it works is if the market is going up, at least for me, I'm not interested in trying to pick the high of the day. Somebody else deserves to do that and get rewarded. Meantime, most retail traders who engage in that practice have no sustainability in the business. How might you get involved in a market that is moving higher? The way that I participate, and you have to vet this for yourself, is counter rotations. If this is the retail price right here in this auction, too low, too high, how do I participate? Well, if the market comes outside, now remember, there's sell stops being trailed under this retail trader behavior. Oh, I don't want to give it back. Of course not. Well, but what do they tend to do? They tend to all do the same thing. They're going to start tucking their stops up, and the market can come down. Also, if somebody tweets or trips over the cord at the CME, you can see a lot of things happen. So you always have to manage risk, and you always, in my opinion, have to assume when you put a trade on, those dollars are gone. Psychologically, it's basically an investment in a yield. It allows you more detachment from the outcome, though we are like cheerleaders, you know. So, like, come on, you know, but whatever happens, happens. This is the last area down here that is too low. This auction here, too low, too high, too low, retail, I'm out of here. Next one, too high, too low, too high. So this is a low volume node. So this is an outside edge. And here's the other thing, stops are under here. So what we want to see now is if we come outside, how far do we come? Now, I'm going to take you a little deeper just to give you something to think about. And these are not trade recommendations. Sellers were here. Absorption was here. Sellers were there. They got filleted. We're going to put a little line here. Actually, let me get rid of this one. I'm going to do it a little different. That's support, just something to note. So I'm going to start looking at where the auction changed, right there. Because the sellers were there, the buyers absorbed these guys, and the buyers took over. So if you look at where the behavior changed, that's support. And it doesn't mean, you know, the market won't just keep going. Down here, I have my sellers there, my buyers are here, my buyers are here. So I want to be aware of this. And you'll notice the high volume is there. I want to be aware of this. There's one other location. I'm going to try to get these on here for you. And this is to help you see. So my buyers are here. I got my sellers here. They were absorbed. So where did my buyers take over? Here. It was right up here. Just going to put a little of this on here for you. So the buyers are here, 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 there. Up. What about out here? Let's come back. Buyers are here, sellers are there. What happened over here? Absorption, buyers, break high, sellers are there. Now let's come back to structure. Outside edges here. This is important. So the way to operate in this is rotational trading. It's called mean reversion. In this fractal, this is the mean. So this is your high volume. So this is your retail price. Think of this like a store. There's buyers here. These guys were absorbed, and the buyers are here at the low volume node. I'm going to mark this because I need to be conscious. If it comes out here, I might get long back to here and then out the top. And I say might. I'm not going to call trades because I don't. I take stops. You take stops. Everybody does. It's just the way it is. So now, so the idea of this is to be looking out in here, and this is called mean reversion. If we come outside, and we haven't been doing a good job of getting outside, if we come outside, then it would be back here. You have to know what you're going to do before it happens. Sellers were there. That's what creates this. And then we reject it back to the high volume. I hope this makes some sense. Now, all we can do with this now is hang out. Work on your crochet because you need to be waiting for a location. I hope that makes sense. How you guys doing? Hope you're getting something out of this. You know, we have to wait for a trade. And if we don't have a trade, your job is not to trade. And that might be hard for you because of FOMO. You know, because tell me if this isn't what's running through your mind at the moment. I should have got in. I could have got in down below. I just wasn't sure. By the way, nobody's sure, so don't worry about it. I got to find a way. I left 50 points on the table. If that's what's running through your head, that's a problem in trading. In fact, when I have those thoughts, and we all have the same thoughts, I recognize what they represent. And if they represent FOMO, which is what it is, and now the lunatic under the hood, I call Hyde, Jekyll and Hyde. If Hyde is taking control, that is a path to self-destruction, really, in this business. So when I'm aware of these emotional responses, you shoulda, hindsight's 20/20 in this business. And Hyde will always tell you in hindsight what you should have done. But when you're in an environment of complete randomness 100% of the time, that's not how you trade. What you do is, to function in randomness, it requires statistical edge and patience to just wait for the edge. And most days, that edge is going to show up numerous times. And if it doesn't show up in a certain condition, let's say like today, as an example, your job is not to trade because you could do severe damage to your account by responding to FOMO. And how many of you guys have chased the market, just blindly rush in? Why does that happen? Even though you know it's not good for you. It's because of your psychology. In fact, I posted in TraderLab a brief synopsis of a great book by Tom Hogarth called The Best Loser Wins. And I think I placed it in there on Saturday. And it's really, it's a high-level overview of the key points. And if you're not familiar with him, The Best Loser Wins, but there's a synopsis. I think it's like 10 minutes, maybe a half hour at the most. It is a important thing for all traders to read, to learn about the impediments to success and longevity. We have a trend configuration, so there's no shorts. All there is long continuation trades if they show up. So my job, if I'm not long, is to wait. And if a trade never shows up, I don't have a trade. And I'm very confident a trade will show up. That's the nature of the market. Because remember, the market goes up to go down, the market goes down to go up. Now, we are responding to a substantial fundamental input. And our next target up above is 59.47-ish. Where does 59.47-ish come from? Where does it come from? It's there. So right now, we're motorboating up. We're sitting around 59.20. And this can be some resistance right here. We can test in here and potentially rotate. And here's why. This is an outside edge of a distribution. And yet, remember the thesis here. News and the tariff roulette disrupted the auction. Now we're put tariff roulette, a new spin of the wheel, disrupted the auction. We can come back here. So all this is on the hit parade. It's not a recommendation. When you have a new fundamental input, the reason this is going on here now is because when you change the fundamentals, the market responds and has to auction. Nobody, you can't, quote, predict anything in the market. All you can do is try to get an alignment, and that's what trade plans are about. And this is really an outlier event, So anyway, this is the next target, and it's not a recommendation. And there's going to be stops here. Theoretically, we can get up here and wherever, And that doesn't mean today, it doesn't mean ever. It just means we can. Hope that makes sense. That's where the levels are coming from, and they're auction based. So now let's get back and see how we're doing. So still, this is the last location here for a possible, let me just check something here. One moment. I got to adjust some levels, I think. Yeah, I do. Okay. One moment. I use Investor RT, which exports. It's a Bookmap for me, so it's very cool. I don't have to be doing all these levels manually where it says cloud notes. So you get a sense that, so I'm making adjustments in Investor RT, which will be reflected over here. So you're going to see like these HVNs, it's showing me where the high volume nodes are. So it might show me this one. It's going to show me the outside edges of these distributions. So I don't have to be, because it's very easy when you're concentrated here. This says counter rotation. This is a sweep. So let's watch this. This is with the stop and iceberg detector. This is the sweeps. It comes with that, the MBO package. And I find when you get a sweep, often we get a counter rotation. And it's not mechanical. It's just what's going on. So let's watch. Where's my levels? 1675. If you guys have questions, please post them. I'll do my best. I don't have anything in the sense of other than what I've already suggested to you as far as locations go. So this is the high volume nodes. The low volume nodes ought to show up at some point. Takes a little bit of time before it comes over because they're cloud. And let me just see if they're, yep. Oh, LVN. Yeah, oh, there they are. So this is the outside edge. That's the, like a VPOC. So if it comes out here, which is why I put that over there, then, and gets the stops here, where the absorption was. So the buyers are here. And again, for me, it's not coming out. And I'm, these aren't trade recommendations, but it is not coming out far enough for continuation reversion trades. So this is where I would be looking in here, but the buyers are very aggressive here. This is where the sellers last were. These guys were absorbed. This is an area for longs, but it does not have location. I just want you to understand, and this is your sweep, which suggests the counter rotation. So we just have to be observant. So I don't have any trades. Even if I did, I wouldn't. I don't call trades. You don't need to take my stop. You know, we all take stops, so we got to get over that. Casinos seem to have managed that pretty well to pay the gamblers. You never see the dealer get depressed. So we're watching the behavior here. Sellers are here. This buyer was absorbed. The buyers are down here. The stops are under here. So, and right now this thing is still rocking. Hope that makes some sense. Hope you're getting something out of this. Part of the trading business, actually the main part of the business, is to know where your trade is and not to interact until your trade shows up. Because if you're trading without an edge, you're gambling, and that's not sustainable. So you have to learn, in my opinion, to manage those emotions, because that's what takes most retail traders out of the business. I believe if you come to TraderLab, you'll learn how to trade if you do the work. And of course, past performance is not indicative of future results. Naturally, this isn't for everybody. But the real issue for us is the psychology. The juices that flow, the hormones that are released, the primal part of our brain that seeks to avoid risk and uncertainty, and we're in an uncertain, random environment 100% of the time. So if we're in a random environment 100% of the time, what do we do about that? Think about it. So what you do about it is you know where your trades are, and then you wait for your trades. That's as complicated as this gets. I hope that makes some sense. How we doing in YouTube? Hey, how about a like if you're getting some value from this? I certainly don't have. So currently, I have no trades up here because, at least for me, I only trade when they meet parameters. In other words, range to get risk neutral based on a minimum 2-lot configuration. And if that doesn't have it, then the trade's not qualified. It's just a matter of waiting for your bus. And if your bus doesn't show up today, it's not about I coulda or I shoulda. The only way you measure yourself in this business is what your plan tells you to do. And then did you follow it? And if you had no trade today because you did none of the behavior qualified based on your plan, that's a successful day. The processes that create failure for retail traders are going off plan. You go off plan, you're on your way out of business. Because if you get rewarded for going off plan, you're reinforcing. It's kind of like a dog. Dog chases cars, the cars drive away, he's been successful. So he always chases cars until he gets run over. Sorry, I hope I don't offend anybody, and I'm a dog lover too, but I'm saying is it's Pavlovian. So you've got to consider how your mind works, and that you want to develop the discipline not to be triggered by these emotions. It's a common element for all of us being human, and it's part of our primal wiring, fight and flight. Think about how a dog works. If the prey runs away from the dog, it triggers pursuit, right? Well, we have similar wiring, but the smart hunters don't chase, they wait. So in a way, we're hunting opportunity, if you want to think about it. So ask yourself, what is the better situation over a large sample size of interactions with the other participants? Is today the day that you throw it all out the window and maybe have winning trades, breaking your rules. But the next time your mind is going to remember getting paid for this. Whereas day to day, you will not get paid for this, chasing the market and doing FOMO. That's why trade plan. So there's no trade here. I can tell you for me, I just sit back. Why? There's going to be a trade. And if nothing shows up today, I'm okay. Fortunately, something did show up. But if it didn't, I'm still okay. We're not hourly workers, and when we go to work, we don't always have an opportunity that fits, and some days we lose, right? Depending if we are trading a plan with an edge. That's just overhead and cost of production. So that's the business. And if you want to create potential longevity in this business, you need to know where your market and your alignment is, and you need to know the conditions that don't favor you. Hope that makes some sense. There's no holy grail. Louis, I don't have the NASDAQ up here. I focus on the ES because it has the most depth for developing traders. And the NQ is basically, if you learn this process, this is a generic process. I traded NQ. I was a high volume trader in the NQ many years ago. This process is generic. You could overlay this on any market that has volume. Anything, doesn't matter. Like bonds, currencies, as long as you got volume, all markets, this is the fundamental basis of market behavior. If you understand the auction principles, in other words, what is this all about? Why is the market doing what it's doing? Why is it doing that today? And how do you get in alignment with it? It's generic. So if you learn the process, all you got to do is vet the specific market. Doesn't matter. You trade currencies, you trade pairs, you trade crypto, doesn't matter. So if you learn the process, you just extrapolate it and then adjust it to the specific idiosyncrasies of the market you trade. Would the confirmation be for the long when the market came in value and the VPOC moved up? Yes. And confirmation is not a word I like, but I'm going to say is the change in behavior. Let's look at it that way. The change in behavior was when we found too low inside that previous value area. Now, the trick is, naturally, what's too low? And when it happens, you're only going to know after the fact. And then it's trying to find any kind of counter rotation to get involved. And unless somebody has a really prepared plan for this, they might not be able to get long. I mean, to me, this was not an easy long. There is no such thing as easy in this business, but some things are clearer. And the only thing I knew about today was that we had a gap, we had a fundamental change, and when we opened and we got our selling, those guys were responders. When we got the response of selling, then it's a matter how far in do we go. But we also knew, based on the higher time frame, that the probability was to come back to this 5908-ish, because we were down in here and it could go all the way. It could do anything, So that part, we don't know. It could have just come back here. I mean, that's just the way it is, But what we know, let's go back to what we know, because this is how you put the case together. It's like being an attorney. You're making a case for something. What was the important piece? The ETH low And there's a naked VPOC below here someplace. I think I lost it. Let me come back here. So if you think about this, yeah, it was 58, 58-ish. Let's just use that number. 58, 58-ish. ETH low was 62-ish. So the 58-ish is probably right over here someplace. Right here. So if I know a price might be too low in the ETH, and the reason it's too low is because we couldn't get back to what was retail, then I have that and I have the ETH high. I'm just saying, okay? So that was the case for me for longs only, but because of the responsive selling, you just have to kind of be patient. So anyway, I hope I answered your question. And if you have nothing other than the migration, well, we did have VPOC migration. I narrated it at the top of the stream. If you had a chance to see that. If not, watch the stream again. And if you guys who are visiting in YouTube, if you're interested in TraderLab, there's a link in the bottom of YouTube. There's no cost for it. The TraderLab's really about the business of trading and the typical problems we all face as developing retail traders. I believe anybody can learn how to trade, and it's not about, most of us think trading is very complex. Let's redefine what it is. It's random. So let's replace complexity with random. If it's 100% random, 100% of the time, we cannot predict anything. If we can't predict anything, then our job is not to be right. Our job is to only interact where we have a statistical edge, and then allow over a large random distributions of samples, determine if we have a statistical edge in a specific condition and where that edge might show up. It's not the last trade, it's all of them that you can define with anchored inputs. Remember, what's an anchored input? In the casinos, they only play games the same way. They're anchored. They're not variable inputs like we all have with our multiple indicators and spaghetti against the wall and whatever else it is. Because of all that randomness. If you have random inputs, you have no edge. You just have noise. And everybody has winning trades. I mean, think about it. If you had nothing, and not even a chart, and you press buy or sell, some of them are going to win. That ought to tell you what randomness is about. So when we're in a random environment, we need to be thinking about, in my opinion, only interacting where we actually know we have an edge. And even then, we're going to still pay the gamblers. Casinos do. But over time, if that process has an edge, and we have the discipline only to interact when an edge shows up, is it logical to you that it gives us the opportunity to extract the dollars from the other participants over time? Does that make sense? Well, the thing is, VPOC migrations are a structured trade in the TraderLab, but today is, I think, more difficult to trade for most traders because the market wasn't waiting around. It was kind of like the bus never slowed down enough. You had to kind of run after it. And we had the VPOC migration structured trade, but it really took a little more aggressive behavior, I think. And if it doesn't fit, your job is not to trade. If that's not in your plan, then it's been a great day for you, because not trading when you don't have an edge is what will keep you in the business, assuming you actually have an edge. So today is not really important. What is important is what you do as a business person, not that, if you don't have a way to trade this, then you don't trade it. I will say, now I've been trading going on 46 years, as you guys know, professionally and otherwise, hanging out here with you. You will find that you can get patient and you can become very discerning when it comes to being a discretionary trader. When a trade shows up, you showed up. If the trade doesn't show up, then you give yourself a gold star for following your plan. That will keep you in the business, assuming it has an edge. If you're chasing the market and gambling, that's the path out of the business. And that's proven by the failure rate for retail traders. That's what most of them do. They're playing a video game, and I can assure you this is a business. So anyway, congratulations. If you didn't take a trade without an edge, that's vetted. If you did, that's FOMO. Put it in your error cost calculator. We had an interesting conversation in TraderLab. I actually don't remember when it was. It might have been Friday, about the error cost calculator. I found many years ago that, just like you, I'd make errors. I'd have FOMO. We all make errors, but FOMO, this, that, and the other thing, moving a stop, bailing out, not taking a trade, taking a loss, being emotionally attached to the last trade, not taking the next one. And over time, those are errors, right? And I'd journal them, and then I'd forget about them. Yeah, didn't do this, didn't move the stop, blah, blah, blah. And then next, right? Is that you? Well, maybe not, but it was me. So I came up with something, I don't remember when it was. Well, in the early 2000s, I think. Maybe, I don't know. And I labeled my errors and started posting them. Now, if I did a FOMO trade and I got paid, let's say I made 10 points, I would subtract 10 points because even though it was a positive outcome, it was negative. So I subtracted it because I know if I kept doing that over time, there's going to be more losers than winners. So because there's no edge, it's a guaranteed loser. Unless I vet something and it has an edge, then I just make it part of my plan. Skipping the trades because of emotional response to the previous trade, moving a stop, bailing out, with all the stuff we do. I quantified it. It changed everything for me because I found out I was throwing, let's just say $5,000 to $20,000 a month out the window. I was giving it away. And I still had my losses, which is fine because everybody does. But when I removed the errors as much as I could, and everybody still is human, so occasionally we still, have a lapse in concentration. But if you can, I would suggest, assuming you do the job and actually create a trade plan or a business plan and know which trades have an edge and don't trade the ones that don't, even though you see them work often, you see patterns. Yet imagine if a casino created a game where they won a lot, but over time they lost. Would they keep playing the game? Then why are you doing it? And why are you making errors? Quantify your errors. I wrote a check out. This is still in the days where you had paper checks that you would mail to somebody, right? And I put that up on my monitor. You want to get motivated? Take $10,000 or $20,000 out of your bank account or your trading account and throw it away. Is that going to motivate you? These are the tools and the kinds of concepts that we work on in TraderLab. All these pieces need to be put together to make you the best you can be, assuming you're motivated to do the work. Many retail traders just want to play a video game, and that's fine. I always suggest go to the casino, be sure to get the cocktails and the ticket to the buffet, because that's what you're doing. And it's fun, but not sustainable. Let's watch. High volume node is here. This is our retail price. This is too high. There's your test. There is no short for me. I have nothing to do still. I need these longs, wherever they are, to get thrown under the bus. The market rotates. Now, because we're in a trend configuration, rotations are shallow, and it may never come back to a location for me. And if it doesn't, I have to be okay with it. So, nothing for me to do. I still haven't had anything since way down below. Now, so you understand mean reversion? Mean reversion is outside in trading. And in the trend configuration, the only way I can now trade this, and it's just, again, me, I'm not saying this is good. For me, I need it to come out and take stops. And I know my buyers are here, right there, and my buyers are there. That's what I know. I still did not come outside to my outside edge. This would be a long. Remember, I mentioned that to you. If I come out here, I'm going to continuation. Has not done it. This right here is an area to observe. I'm just going to mark it out for us. That's because the liquidity was there. Let's see if something happens of interest to observe. It's not a recommendation. It's just an area to observe. Let's watch this. Sellers were there. Observe. Not a recommendation, guys. This is a area of interest. So what is going on here? Great question. What happened here? Broke high, back to here, back to where the sellers were here. And now who knows, right? The seller. Maybe it's somebody going, I'll take my one lot off. Louis with the one lot. I come down here. Sellers are here. Buyers are there, and buyers are all in here, okay? These red bubbles are stops, and I don't know. Maybe somebody's selling it. You got me on that one. The buyers are there. That's absorption. Break high. Now I have this liquidity, and I had my buyers took over the sellers right here. What does that set up for me? Think about it. Anybody see that? What do you think that is? Abstract grooves. The link to the TraderLab is down below in YouTube. You click that link, it'll take you to a join, and you will need to confirm your Discord email, keeps the spam out, and then you'll have access to the Bookmap server, and then come to TraderLab. Let's watch this. So what is this? Anybody? What do you think this might be? And what's this up here? What happened here? Let's box this out, this distribution, and let's see if we can put some ideas together for this astute audience of traders. So this is where the sellers were, no clue, and the buyers, well, get back here, were there. Sellers get below the buyers, so this is where the buyers, absorption, no clue, break low, change in behavior right here. Now this can also be here or here. It's all the same. I'm just throwing it over here. Doesn't matter. Now this is a sweep. This is a sweep. This is suggesting potential rotation. This is also suggesting maybe we'll get some rotation. Okay, let's watch this. This is now resistance up here. Sellers are here. Resistance. Buyers were here. We're below them. Resistance. This is where the buyers absorbed. Now remember, the market is long. When the market is long, we have to be very aware of where the stops are. Write this down. Think like a retail trader. Don't act like one. Are you going to put your stop there? Well, we want to see what happens right here. And this is not a trade recommendation. Remember, the market is long and the buyers have had no problem so far, except now we have to see how far back we come. And the process for participating in this is outside in trading. Now, the problem with mean reversion, and the reason we call it mean in TraderLab, is where's the outside? Is it going to be here? Or are we going to take these stops out under here and under here? No way to know. So we have to watch. And if you do get long, you have to be thinking about where the sellers were, which is up in here. So the range gets very tight. So the further out we can come, the more range you have for getting a scale and then managing your trade to higher targets. So this is another part of a trade plan. Trend up, no shorts, unless you're a counter trend trader and you have an edge in a trend configuration, and then outside in. And of course, the joy of this is outside from where? Well, we got this. And we have this. So you guys can follow this and see what happens. If you're interested in the TraderLab, by the way, there's that link in the bottom of YouTube. This is what the 60 PDFs look like. And these are broad strokes. You have to reverse engineer these. This is not a trading course. Years ago, in like 2020, 2021, I shared concepts because other traders in Bookmap were asking me what I was doing. So yeah, I said, this is what I'm doing. But you can get some ideas from this. The actual business of trading, say 2020, is understanding structured trades. Some of these are actual trades and others are just screenshots. So you can kind of see some of these. And some of this is experimental stuff. I was working with Bookmap developers back then on some ideas. Most of that gets thrown in the wastebasket. Some of them are incorporated into add-ons. That's part of the thrill of research. Do you have any final questions? I got about 2 minutes. I appreciate you visiting the TraderLab. Please leave a like. If you're interested, use the link in the bottom of YouTube. Visit the TraderLab. There's no cost for it. It's a serious community. It's a professional community. It doesn't matter how long you've been trading. What does matter that if you come to TraderLab, that you understand this is business. So it's not romper room. There's plenty of that out there. Notice where we are coming off from right now. We have come to our location. I'm just going to pop so you can see the location. And it's not a recommendation. It's an outside edge, and this is very difficult here because of range, and I don't call trades. I'm just saying is we can anticipate behavior. We cannot predict it. Please give a like on the way out. Develop a trade plan. If you don't have one, come to TraderLab. It might make a substantial difference to your outcome on this journey, and I'm quite willing to share my journey with you. Take care, guys. Don't forget to leave a like, support the channel, subscribe to it, follow the streams, participate in the TraderLab, and thanks for visiting. Appreciate it. Look forward to seeing you guys tomorrow.